breaking news here. It's breaking a little bit after we finished filming the show, but it's still important enough that we want to go ahead and include it. So that's why it's a little bit disjointed today. So the U.S. inflation numbers have just come out for August. Here's what they are. Inflation is 8.3% in August year over year. Very high, down slightly from 8.5% year over year in July and 9.1% in June. However, and this is the most important one, so inflation actually rose by 0.1% in August when many expected it to drop. Shelter, food, and medical care are the ones which are up, which is offsetting the 10% decline in gas prices. Food in particular is the one which is really concerning, Krystal. Heather Long, the Washington Post, noting, quote, the food index has increased by 11.4% over the last year and the largest 12-month increase since the period ending in May of 1979. So even though gas prices are down by almost 10, 11% over the last, I think, 100 days that they've dropped every single day, has not been enough to offset shelter and food costs. So shelter in particular coming in extraordinarily hot as to how high renters are paying. It's really a tragedy, and it just shows you that you can't just get out of this by focusing on gas alone.
Yeah, that's right. So gas is down 10.6% just in a single month. So the fact that you have these other factors which have pushed inflation to continue to rise really shows you how severe the price hikes were in those key categories that you're talking about here. So if you look year over year, you know, some of the price hikes we're talking about here, airline fares up 33%, electricity up 15.8%, food at home up 13.5%, new vehicles up 10%, food away from home up 8%, and on and on and on. Shelter year over year up 6.2%. So obviously these are key categories that hit the household budget directly and people really feel immediately. The reason why this is such a big deal and why we wanted to do a breaking news segment on it is because the expectation had actually been that month to month, the inflation rate would tick down a bit. So maybe like 0.3% was roughly what the expectation was, that it would decline. Instead, you had a 0.1% increase. Now the markets are reacting very strongly. The last I looked, Dow Jones was down like 500 points. All because now the expectation is set that for sure the Fed is going to continue with those aggressive rate hikes. We already covered yesterday how Lael Brainard, who is the second policymaker in command over at the Fed, was sounding notes of we're going to continue this aggressive policy, this in spite of the fact that their own research in certain instances shows that there is a risk that they move too fast and too aggressively and spark a severe recession. Of course, we also now know that Jerome Powell, who is the president of the Fed, has said that he wants there to be some pain, that he thinks that that is necessary. And of course, you have people like Larry Summers out there saying, oh, we have to have unemployment at 10% in order to get inflation under control. So this is only going to continue to make the case to the Fed to hike interest rates, even as you see, thus far, they've taken some aggressive action and it hasn't worked. Why? Well, one reason could be because, as we've documented many times, as Elizabeth Warren, to her credit, has been pointing out, the Fed's tools do not get at the core reasons that we are having this inflationary spiral. So that's why this is so significant. It really determines, you know, the Fed, after we had seen some signs that inflation might be easing, and certainly gas prices have come down a lot, that has made consumers feel a little bit better, consumer sentiment ticking up. With these new numbers, this is going to almost set in stone that the Fed will at least do another 0.75 rate hike next time.
At the very least, that's happening. One of the important points pointed out by Derek Thompson is part of the reason why inflation is so high in shelter is that, the current rent rates might be down, but everybody else is still locked in at the past ones. So housing policy and rent inflation and shelter is still going to very much be high for 6 to 8 months. Fed policy has no impact on the current locked-in rates at all, or many of the other things that people have had to pay. So look, we'll see how it works out, but undoubtedly it means the Fed will hike rates. What's the Dow at right now? Did the markets drop?
Oh yeah.
I'm assuming that's gonna go. So we're down 625 points when we're filming this segment. Not great. So we'll see how it all works out.
Yeah. All right, guys. Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.